Cigna shares have declined 15% year to date. In December 2018, Cigna finalized its $67 billion merger with PBM Express Scripts in order to expand its reach within the sector. Some investors have expressed concerns that the merger has overexposed the company. However, a Deutsche Bank analyst argues that shares are now trading at a discount. Moreover, the analyst has initiated coverage with a buy and set a $207 price per share target. The price target reflects confidence in Cigna's ability to soar 29% over the next 12 months. Others on Wall Street seem to agree. Cigna has been assigned ratings in the last 3 months. All are buy ratings, with an average price target of $214 per share. This indicates 33% upside potential. Maybe, just maybe, we should take a look. One company that you all may want to watch right now is Cigna. Cigna stock is trading at a PE ratio of 8.68, which is slightly lower than the industry average of 8.98. Over the last 12 months, Cigna's PE ratio has been as high as 14.12 and as low as 8.12. Therefore, the current PE ratio is trading near the lower end of that range. Cigna also has a PEG ratio of 0.74. Again, the PEG ratio also takes into account the company's expected earnings growth rate. The industry has an average PEG ratio of 1 right now. Therefore, Cigna's PEG ratio of 0.74 is below the industry average. The price to book ratio is currently about 1.36. The price to book ratio is a method of comparing a stock's market value to its book value, which is defined as total assets minus total liabilities. This 1.36 price to book is favorable when compared to the industry average price to book of 1.53. Value investors often use the price to sales ratio. The price to sales ratio, or price divided by sales, is often a great way to look at a stock because this measures revenue, and revenue can't really be manipulated and is a much truer indicator. The price to sales ratio is 0.57, while the industry average price to sales ratio is 1.08, another favorable measure. Cigna is expected to earn $16.77 per share for the fiscal year ending December 2019, which represents a 17.9% year-over-year change. Analysts have been steadily raising their estimates for Cigna over the past 3 months. The Zacks consensus estimate for the company has increased 1.2%. This is a significant factor for value stocks. Once earnings start to move, the price will too. So pay particular attention to this metric. So now let's go ahead and take a look at our charts. And we're looking at the 20-year monthly chart on Cigna Corp, and the symbol is CI. For disclosure purposes, I do not hold any shares of Cigna at this time. Now, I like Cigna for a couple of reasons. First, the price chart. The price chart looks good to me. And then, of course, the oscillators. They look good to me too. So hang through the oscillators because there's some interesting things to take a look at. But beginning with the price chart, here in, say, late 2008, when the bottom was set, the uptrend is really nice all the way through here, even though we're having a current downtrend over to, say, the last year or so. Now, the stock since about 2010 has ridden that 50 EMA all the way up, again, only until the last several months or so. But that pierce through the 50 EMA is, in my humble opinion, all that significant, and it seems to be contained so far in this area here. Let's go ahead and take a look at the MACD. Now, we had the maximum positivity there with the downtrend, and then an attempted move up through the slow line that got reflected on its way down here. And for the last, say, definitely 9 months, maybe up to 12 months, we've been heading on down. And the difference between the fast line and the slow line is pretty wide. However, the good news is that we're still near that zero line. Moving down into the histogram, we can see that it's had some fits and starts. Looks like it's trying to bottom there in that area. It is at -5, but you can't have everything. Here into the price rate of change, we're seeing that maximum negativity, at least in my opinion, right here. With a move on up, we almost made it to the zero line. It got reflected back down, but I think it's going to attempt a bottom here relatively soon. And I say that is because you only go back here to 2016, 2017 to see another similar pattern. That move down, the move up, got reflected back down to this point here, and then off it went. So same thing, bottom, up, reflected back, and I think we're going to turn relatively soon. Could take a month, two, maybe a little bit more, but at least on the annual chart, it's relatively soon. Moving here into the RSI, we're at a relatively weak 37.80, and you can see again that point there where the maximum negativity, at least recent, was with the move on up. Didn't quite make it to that midline, but we're not too far away, even with this reflection. So if we're able to gather enough steam to turn this and head back up, I think things are going to look pretty favorable. Into the stochastics, this doesn't look too bad to me either. The move down here, an attempt to move through the slow line, the reflection back down here. So it is in that, say, oversold territory. But whether it stops here or not, I'm not quite sure. But let's take a look at this here. Going back to 2008, 2009, another similar pattern where it attempted to move up and through the slow line, got reflected back, and then turned at this point here. So currently, we're really not too far away from that same point. And then the move went up and finally through the slow line. So that could take a few months, maybe a quarter or so, but I don't think we're too far away from that. Into the volume looks fine. A tick up, but that could be simply sellers trying to get out of the stock. And at this point in time, if you haven't gotten out of the stock, it might not be worth selling. It might be worth holding on. Looking at the Williams, we can see that the bottom is attempting to set there in that base. And for right now, at least at this level here, we have a little bit of a upward trend as long as this move here is truncated and decides to head up pretty soon. So in my humble opinion, both the price chart and the oscillators, the majority of those oscillators look good. So study the fundamentals. You need to do your due diligence, conduct it thoroughly. But in my opinion, Signacorp is a candidate. And so for today, that's ChewDog Charts. Thank you.